So, let's talk about something incredibly important. It's a three-digit number that pretty much runs your entire financial life. I'm talking about your credit score. Think of it like a report card for how you handle money. Lenders, landlords, employers. A low score, like something in the 600s, can feel like you're trying to run a marathon with your shoes tied together. It means higher interest rates, getting denied for loans, paying more for things like car insurance. It's a financial handicap that costs you real money month after month, year after year. It's a silent tax on your future. Now imagine the opposite. Imagine having a great score like 750 or higher. Suddenly life gets a whole lot easier and cheaper. Lenders see that number and they start rolling out the red carpet for you. You get the best interest rates on mortgages, which could literally save you tens of thousands or even hundreds of thousands of dollars over the life of the loan. Before we can fix the score, we need to understand what actually goes into it. It's not just some random number that a computer spits out, it's based on a formula. The biggest player in the game is FICO. Your FICO score is calculated using 5 key factors, and each one has a different weight. The most important one by a long shot is your payment history. This makes up 35% of your score. Do you pay your bills on time? Every single late payment can ding your score and stay on your report for up to 7 years. This is the foundation and easiest part to control. The second most important factor is your credit utilization. 30% of your score. It's the amount of credit you're using versus what's available. Example, $10,000 limit, $5,000 balance. That's 50% utilization. High utilization signals risk to lenders. Lowering it is one of the fastest ways to jump your score. Next, length of credit history, 15%. Lenders want long, stable history. Don't close your oldest cards even if unused. A longer history proves responsibility. It takes time, so start early. Average account age matters. Opening many new accounts can hurt it. Last two, credit mix and new credit, each 10%. Credit mix equals sign different types. Credit cards, car loan, mortgage, student loan. New credit equals sign how often you apply and open accounts. Lots of recent applications create hard inquiries. That looks desperate. Space out applications. Alright, let's get into the single most important action you can take to improve your credit score. I'm talking about paying your bills on time every single time. As we just covered, this makes up 35% of your FICO score. You could do everything else perfectly, but if you have a history of late payments, your score is going to suffer. A single 30-day late payment can drop your score by as much as 60 to 110 points, especially if you have a high score to begin with. That one mistake can take months or even years to recover from. It's the cardinal sin of credit management, and we need to eliminate it completely. So how do we make sure this never, ever happens? The answer is automation. You need to set up automatic payments for every single one of your bills. I'm talking about your credit cards, your car loan, your student loans, your rent, everything. Most banks and lenders make this incredibly easy to do through their online portals. You can choose to pay the minimum amount due automatically, which acts as a safety net. This guarantees that you will never have a late payment reported to the credit bureaus, even if you forget to make a larger payment manually. This is non-negotiable. Set it up today. Now, some people are afraid of autopay. They worry about overdrafting their checking account if they don't have enough money in there when the payment hits. That's a valid concern, but there's a simple solution. First, set the auto pay for only the minimum payment. This is usually a small amount like $25 or $40. Second, set a reminder on your phone a few days before the due date to check your bank account and manually pay the full statement balance if you can. Now for the secret weapon that can boost your score ridiculously fast, tackling your credit utilization. This is the second biggest piece of the pie at 30% of your score, and it's the one you can change the quickest. As a reminder, this is the percentage of your available credit that you're currently using. If your credit card balances are high, your score is being held down. Visual graphic. 2 credit cards. One maxed out with a sad face, one low balance with a happy face. The magic number here is to keep your utilization below 30%. So if you have a $10,000 total credit limit, you should aim to never have more than $3,000 in combined balances. But if you really want to supercharge your score and get to that 750 level, you need to be even more aggressive. The people with the absolute best credit scores, we're talking 800 and above, consistently keep their credit utilization below 10%. And honestly, the sweet spot is even lower, somewhere between 1% and 5%. It might sound crazy, but this tells lenders that you are in complete control of your finances. You have all this credit available to you, but you don't need to use it. This makes you look like an extremely low-risk borrower, and your score will skyrocket as a result. So, how do you get this number down? The most obvious way is to pay down your balances. This needs to be your top priority. Go through all your credit card statements and target the card with the highest balance or the highest interest rate first. Throw every extra dollar you can find at that balance until it's gone. Cut back on discretionary spending, sell some stuff you don't need, or pick up a side hustle. Getting those balances down is a direct investment in your credit score. Every $100 you pay off is like buying points for your score. It's that powerful. Right, so you could be doing everything right, paying on time, keeping balances low, but there might be something on your credit report holding you back that isn't even your fault. A shocking number of credit reports contain errors. Accounts that don't belong to you, late payments that were actually on time, incorrect balances. These mistakes can be devastating to your score. You might not even know they're there. Become a detective. Investigate your credit report. This is a critical step in taking control of your financial health. The good news, checking your report is free and easy. By law, you get a free report from each major bureau every year: Equifax, Experian, TransUnion. Get all three at once from annualcreditreport.com. Don't use sites that bait you into paid services. Stick to the official one. Pull all three reports and go through them with a fine-tooth comb. Check every single detail: personal information, every account listed, payment history entries. If you find an error, you can dispute it. File the dispute with the bureau reporting the error. Usually online is fastest, or you can do it by mail. Explain what's wrong and why, and attach support documents. For example, if they're reporting a late payment but your bank statement proves you paid on time, include that statement. After you file, the bureau has about 30 days to investigate. They contact the creditor to verify. If the creditor can't prove it or doesn't respond, the bureau must remove the negative item. Negative marks like late payment, collection, an account that isn't yours, removed can make your score jump almost overnight. Don't let someone else's mistake ruin your credit. Be your own advocate and clean up your report. If you have a very thin credit file or a low score and you need to see an improvement quickly, there is a strategy that can work wonders. It's called becoming an authorized user. This is one of the fastest and easiest ways to piggyback on someone else's good credit history. Here's how it works. You ask a family member or a very trusted friend who has a long history of on-time payments and a high credit limit to add you as an authorized user on one of their oldest credit card accounts. You don't even need to have or use the physical card. Once you are added as an authorized user, the entire history of that credit card account can appear on your credit report. If the card has been open for, say, 10 years, has a perfect payment history, and a low credit utilization rate, all of that positive data gets copied over to your file. This can instantly increase the average age of your credit accounts and lower your overall credit utilization. For someone starting from a 600 score, the impact can be dramatic. It's like getting a decade of good credit history overnight, and it can cause a significant point increase in a very short time. Now, it's crucial that you choose the right person and the right account for this strategy. You need to pick someone who is extremely responsible with their credit. Ask them if the account has a perfect record of on-time payments, and if they keep the balance very low. If they have a history of late payments or high balances, being added to their account will actually hurt your score, not help it. Also, make sure the credit card company reports authorized user activity to the credit bureaus. Most major banks do, but it's always a good idea to double check. This is a strategy built on trust. The primary account holder is ultimately responsible for any charges made on the account, so you need to have a clear agreement. The easiest way is to agree that you will not receive or use the card at all. You are simply being added to the account to benefit from its positive history. This is a huge favor someone is doing for you, so be respectful of that. It's a powerful tool, but it relies on a strong personal relationship. Used correctly, it can be the rocket fuel you need to blast your score from the 600s into a much better range. What if you don't have a long credit history? Or what if your history is so damaged that you can't get approved for a regular unsecured credit card? It's a common problem, but there is a perfect solution. It's called a secured credit card. A secured card is your entry ticket back into the world of credit. It works like a regular credit card for purchases, but it requires a refundable security deposit up front. That deposit typically becomes your credit limit. Example: deposit $300. Get a $300 limit. This deposit is what makes the card secured. It removes the bank's risk. If you don't pay, the bank can use your deposit to cover the balance. Because there's no risk, approvals are easy, even with bad or no credit. This is your chance to prove you can handle credit responsibly. Key: pick a card that reports to the 3 major bureaus: Experian, Equifax, TransUnion. Reporting to bureaus is essential to build positive credit history. Once you have the card, use it strategically. Don't let it sit in a drawer. Use it every month to show activity, but only for small, manageable purchases. Buy a tank of gas. Pay a subscription service, something you would buy anyway. As soon as the charge posts, pay it in full. You must never carry a balance on a secured card. Build a perfect payment history by paying in full every month. After about 6 to 12 months of perfect payments, 2 things happen. First, your credit score rises from the flawless new account. Second, the bank notices your responsible behavior. Many banks will review and graduate you to an unsecured card. When that happens, they refund your security deposit. You use the secured card as a stepping stone to a real card and a path toward a 750 score. As you work to build your score, it's just as important to know what not to do. There are several common mistakes that can quickly undo all of your hard work and send your score tumbling back down. The first and most frequent mistake is applying for too much credit too quickly. Every time you apply for a new loan or credit card, it usually results in a hard inquiry on your credit report. 1 or 2 inquiries here and there isn't a big deal, but if you apply for 5 different cards in a single month, you're going to look desperate for cash. This is a major red flag for lenders. This flurry of applications can cause your score to drop. It also lowers the average age of your credit history. A much better strategy is to be selective. Do your research and apply for one card that you have a good chance of getting approved for. Then wait at least 6 months before applying for another. Be strategic and patient. Don't fall for every pre-approved offer you get in the mail. Those offers don't guarantee approval, and applying will still trigger a hard inquiry. Slow and steady wins the race when it comes to building a strong credit profile. Another huge mistake is closing old credit card accounts. You might think closing an old card you never use is a good way to simplify your finances, but this can actually hurt your score in 2 significant ways. First, it can reduce the average age of your credit history. If you close a card you've had for 10 years, you're erasing a decade of positive history from that calculation. Second, it lowers your total available credit. This means your credit utilization ratio will instantly go up even if your spending stays the same. A higher utilization ratio means a lower score. Instead of closing an old unused card, just keep it open. You don't have to use it regularly. To prevent the issuer from closing it due to inactivity, just make one small purchase on it every 6 months or so. Buy a coffee or a pack of gum, and then pay it off immediately. This keeps the account active, preserves your long credit history and your high total credit limit. The only time you should ever consider closing a card is if it has an outrageous annual fee that provides you with absolutely no value. Otherwise, keep those old accounts open forever. They are valuable assets for your credit score. We've covered a lot of ground, but it all boils down to a few simple, powerful principles. Getting from a 600 to a 750 credit score isn't about some complicated secret or overnight trick. It's about building a series of small, positive habits that, over time, create a massive positive result. It's about being deliberate and consistent. You have the blueprint now. You know exactly what the lenders are looking for and how the score is calculated. The power is completely in your hands. It's a journey that starts, not tomorrow, not next week, but right now, today. Let's quickly recap the game plan. First, you will set up automatic payments for at least the minimum amount due on all of your bills. This is your insurance policy against late payments, the #1 killer of credit scores. Second, you will aggressively pay down your credit card balances to get your utilization as low as possible, aiming for under 10%. Third, you will pull your free credit reports from annualcreditreport.com and dispute any and all errors you find. Fourth, you will be strategic about building your credit history, whether that's through a secured card or by becoming an authorized user. Remember that this is a marathon, not a sprint, but you will see results surprisingly quickly if you are consistent. The jump from 600 to the high 600s can happen within a few months just by paying down balances and fixing errors.